the balance of trade, as could be seen from the graph which I presented, it has been both ups and downs. But over last 10 years, about 5.3% of exports have grown from India, whereas the imports have decreased by about 2.5%. Last year, there was a spike, mainly because of sudden demand which came in China because of the stimulus by the Chinese government on infrastructure, and India having its own lockdown. There was a spike in the exports to China, and the exports grew. If we look at the share of exports of alloy and non-alloy, almost 92% is in a non-alloy category last year, where out of which about 60% is the hot roll product. So that is the large share. Our alloy shares have only gone down. It's about 8% during last year. It has been in the range of 11 to 12% earlier. Major imports to India has been coming from Korea, Japan, and China, which constitutes almost 70%. With Korea, share has increased by almost 50% of their share in last 5 years. Because of the focus by Government of India, there is a specific incentive scheme which the Indian government has brought in to introduce 5 major category of value-added products, and this scheme is due to be implemented between 23-24 financial year to 29-30, with a budgetary outlay of 6,322 crore rupees.
Built a technology platform that brings all that industry knowledge into the digital space and matches that together. And the clever thing that we do there is, if you could imagine a dating website where you put in your profile, you talk about who you are, and it matches you to somebody that could be of interest. Well, that's what we do with steel. We digitize the specifications, we digitize the customer's requirements, we digitize the suppliers' specifications and the products that they sell, and the platform automatically matches the buyer and seller together. Okay, so that's really an efficient way to bring buyers and sellers together instead of the traditional way of telephone, email, and even fax is still happening in the industry. But if we're going to have a marketplace, this trading and buying and selling of steel doesn't work unless you have finance. You have to finance a product, and it's one of the subjects we'll probably talk about in the Q&A is, you know, it's tough to finance a product. There's long cash conversion cycles. It takes, you know, you're producing a product in a steel mill, you got a huge capital outlay. It's very cash intensive business. It then moves into the supply chain through distributors and traders and brokers. Then it moves to an OEM. And at the end of that, the OEM sends it to a consumer or a retail company. And then they get paid after that. From the material coming out of the ground, turning into payment at the end of the day, sometimes and often is over 1 year. So somebody's got to finance all of those cash points that go along. And that's something that we've always done at Rebus, is we actually finance the transaction, which is us bringing fresh liquidity, new cash into the industry. And we've even went a step further and now launched actual finance products where we can help traders, brokers, steel mills, service centers actually purchase with longer payment terms, bring deals to us where we'll manage the credit risk for the customer.
Our advantage is that we source the steel in many countries, mainly in Asia. China, of course, is our main supplier because it's the largest producer of steel. But we also source in South Korea, Japan, South America, because, for example, we have steel producers in Brazil and Mexico. We have a team of bilingual team. They speak many languages, not only English, but also Spanish, Russian, and other languages. And also we use bonded warehouse, drawback, and other tools to support our customers. We receive from our customers an inquiry, we say inquiry, with the specification, quantity, port, destination port, and after that we forward this inquiry to our suppliers. That is located, as I mentioned in the beginning of my presentation, in Asia or in East Europe. And after we receive the price, we inform to our customer with the possibility of a credit line. So most of our customers in Latin America, they prefer to import with credit. I used to say that Latin America is credit oriented. If you offer credit, you have a great chance to export. If you don't offer credit, it's very difficult to export to Latin America. In Brazil, normally in the South America, the customers like to use a bonded warehouse. So we export the steel to a specific port in Brazil or Colombia or Argentina. And after the vessel arrival, the steel goes to a bonded warehouse. And the customer has a specific time to make the custom clearance.
In India, I am not aware of any export duty on the scrap. Yes, there is a duty, a very for on the imports of scrap, which is 2.5% of the value. We do want to keep this in all our trade agreements. There is an effort that keep it out of the, it should be in the positive list with a zero duty. So Indian government also, I think, is focused on allowing imports of scrap. We are not looking at stopping movement of scraps to the country.
What we are trying to do is not change the way you guys do business. We're trying to bring it online. So for a bill of lading for us is the first step that we made that as a document you could actually attach to your file and store it in your history and store it in our records in a digital aspect. I remember if we had a quality or a problem with some material from a steel mill, I had to call a lady up in Lancaster, Pennsylvania, and she would go to our bill of lading storage room and go through a filing cabinet, actually looking for the piece of paper to do it, right? So just by simply putting it online, it makes the process simpler. But look, that people always ask, why do these technology companies have so many technical engineers? It's to break down and codify those products. And I'll be really transparent. Do I have all of that figured out yet? No, right? Some of it has to break, some of it has to go offline, but that's our mission, right? Our mission is to digitize it and make that much easier for you.